This is Broke Money Hustle. And now, here's Broke Money Hustle with Trico and Erik.
Good morning, everyone. It is Saturday morning, June 26th. This is Broke Money Hustle coming to you live on YouTube and Facebook. And the podcast is available on Spotify, Apple Podcasts, Google Podcasts, Overcast, pretty much anywhere you get your podcast now. I think we're on 7 or 8 different platforms. And happy to have my co-host with me, Trike. How you doing, man?
Doing pretty good, despite what my portfolio says.
Yeah. I've done a couple of different live shows with my art and stuff, and it's always like, how are you doing? I'm like, well, better than my stock portfolio.
Exactly.
This week was a rough week. We had a lot of downturn from the big the beer virus scam, and coming back for round 2, shutting down bars in Texas and Florida, and just so kind of putting the market on edge again, getting ready for what I guess would be preparing for an inevitable back to your lock-in. You know, you're gonna die from a something that's 99% recoverable. So there's that, and then plus like some of my stocks took a hit because we had some strange activity by some people who are trying to short the stock. We'll talk about that a little bit later in the program. I do want to remind you that TJ and I are complete amateurs at investing and saving, and we are doing this show because we were already having conversations about what we were doing to try to grow the limited resources we had. So we decided to make it a podcast and bring you folks who are listening along for the ride, and hopefully our mistakes will embolden you to do better, or vis-a-vis, because we like to have guests on, talk about different types of side hustles, different ways of saving, different ways of having multiple income streams, whether that be like a side hustle like DoorDash or Uber, and alongside a day job or some other means of working for money. And then also ideas like investing in the market, which has your money working for you. And
in theory.
In theory.
Until the last week.
This week has been working against me. But the idea is that once you have a certain amount of money, you can put that towards something that's going to earn you a return on your investment. I just got my NVIDIA dividend, which was 11 cents because I only had like 0.7 shares at the time when it was released. I got 1 full share of NVIDIA now. Great looking stock. We'll talk about that a little bit later too.
Awesome.
But so for this week, I'm down $130. Where are you at, man?
Well, you know me, I'm pretty conservative. I'm down about a little over $55.
Not bad. Most of my downs are because of IDEX. Mm-hmm. And that's something I do want to touch on a little bit later. And it's a stock that I'm really heavy in, and I'm heavy in it for the long term, which means you got to ride the ups and the downs. So looking forward to the ups, because it seems like it's going to be a pretty solid company. But I think I wanted to start with a couple of interesting articles I pulled from Barron's via the Robinhood app, and we do use Robinhood on this show. We also use Acorns. I just signed up for webull, and I believe TJ just did too.
Yeah, I was working on it this morning.
Giving that platform a try, and we're going to go through that a little bit later as well. So I mentioned NVIDIA, and I have the stock ticker up on the screen if I can share that. Hit the share button. Currently trading at 365.5. I've seen it flirting with $400 a share. I jumped on somewhere in the 320s. I have 1 share now. It was one of those high dollar, big term stocks that I'm just like, you know what, since Robinhood allows fractional investing, I'm just going to put a little bit of money at a time and try to get 1 share. And then right now I'm doing the same with Netflix. I'm putting a little bit in at a time, trying to get up to 1 share. And eventually, if I have the resources, I'll try to get 1 share of Amazon. Apple's on my list to get a share of. And there's some others that are kind of along those lines. It's like too much money for me to buy multiple shares at once, but I want to just try to put a little bit in, because I don't see those necessarily as investments as I see them as stores of money, stores of wealth, meaning that the NVIDIA corporation is going to be around no matter what the market does, no matter what's going on. They're still going to be around in some fashion. Netflix will be the same way. Amazon is like merchant gold. You know, they're never going away. They're a global company and they just keep growing and growing. So
Exactly.
it's a good place to put your money to earn higher interest than you would in a bank. And there's a little bit of risk involved because you do have those ups and downs. But if you hold for the long term, you're going to see your money grow faster with a stock of Netflix than putting $2,700 in a savings account and waiting 2 years. You know, you're going to see that money grow faster. That's my take on it. Do you agree with that?
Yeah, definitely. I think it's like you were saying, it's a good way to kind of store wealth, and it has a lot better growth potential than, you know, just putting it in a bank savings account. Because usually, especially when you put in a bank savings account, they're making a lot more money off of your money than you are.
Yeah, exactly. And when you put your money in a bank, you're basically loaning them your money so they can send it out. And they're not required to keep cash on hand anymore for making large loans. So if there was happen to be, heaven forbid, this never happens, but if there was a run on the banks again, there's no guarantee your cash is going to be there. So that's why I advocate for gold and silver buying and putting your money in other places.
Yeah, I was bidding on some silver last couple days and I actually won, but I do suggest paying close attention to ounces and and like the different amounts of silver because I thought I was bidding on an ounce, but it actually wasn't. So I kind of overpaid for silver on the bidding I was doing. So
yeah, you got to watch those auctions, man, because most of those coins are just like collectible coins.
Mm-hmm.
And then that's not really something I would say for monetary storage. So
exactly,
go to JM Bullion and kind of stick with them.
Yeah, exactly. Yeah, just always double check whether it says ounces or grams, because most of the time a lot of times it'll be in ounces. So I went in thinking I was buying like I think a 5 or 10 ounce, and I'm like, wow, this is an amazing deal, but it was 10 grams. So definitely not a good deal.
Yeah, that those weights and measurements, they'll bite you if you don't pay attention.
Yeah.
So I kind of want to go through this interesting article here. Comes to us from Jack Ho of Barron's. I believe this was published yesterday. How NVIDIA went from gaming to AI to writing with Mercedes. If you've ever, I'll kind of read most of it here. If you've ever whiled away hours mashing buttons on a video game controller, I'd like to thank you for your service. I began to think you helped invent self-driving cars. You might have pitched in on cancer treatments too. See, on Tuesday, NVIDIA, ticker symbol NVDA, a powerhouse in video game chips, announced a partnership with Mercedes-Benz, the world's largest luxury car maker, to redesign its entire fleet around a software-defined computing network with over-the-air updates and recurring revenue for applications. This is the iPhone moment of the car industry, NVIDIA CEO Jensen Huang told me. To investors who have followed NVIDIA's transformation over the past 5 years, this makes perfect sense. It helps explain why the stock has multiplied 18 times in price over that period. And going through its chart, it's definitely had quite the upscale. Huang co-founded NVIDIA in 1993 to make a new type of computer chip ideal for powering three-dimensional video games, a few years before games needed such a thing. Fancier games soon followed. This fiscal year, which ends in January, gaming will be worth an estimated $6.1 billion in revenue for NVIDIA. And there's much more to the company than that. Pardon my throat this morning. I kind of woke up with a little bit of phlegm. People thought that there were a video game company, says Huang, but we're an accelerated computing company where video games were our first killer app. To see the second killer app, just look at Wall Street forecast for this year. Revenue in a category NVIDIA calls data center is expected to more to double to $6.5 billion. This will mean gaming is no longer the company's biggest moneymaker. NVIDIA owns its success in data centers to the rising use of artificial intelligence because video game chips just happen to be well suited to that type of computing. There's a perfectly good explanation for why this is the case. He goes on to say, I know this because sometimes people try to walk me through it, while I stare back at them like a dog watching Cirque du Soleil. The closest I came to understanding it was this past week, talking with Chris Rowland and Anna's List at Susquehanna Financial Group. He described how lighting up a display pixel involves 3 vectors, an X and a Y coordinate plus a color. Artificial intelligence also uses 3 vectors, he said, in an operation called matrix multiply accumulate. Soon after there, my brain felt hot, which mine's kind of doing that too. So I started thinking about bobbing for apples, which helped. Anyhow, Roland says a lot of companies are trying to make chips even better suited to AI, but that NVIDIA has created powerful software for programming its chips called CUDA, making its role secure for now. NVIDIA leads in what's called parallel processing or performing many tasks at the same time, whereas Intel rules in serial processing and performing a single task very quickly. Right now, there's massive growth in parallel processing. Jefferies analyst Mark Lipaskis calls it a 4th tectonic shift in computing after the move from mainframes to mini computers in the 1960s, to personal computers in the 80s, cell phones and data centers beginning in the late 90s. He attributes the rise of parallel processing to cheap memory, practically unlimited data storage, and yep, improvements in processing chips and software. Let's see, blah, 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 a little bit dry here. AI is increasingly useful in turning new raw computer data into sales. And according to Susquehanna, again, Tesla has the lead in autonomous driving, in part because it's developed its own hardware and software. Other car makers must either spend vast sums to bone up in AI and chip making, or else find a partner, and that's where NVIDIA comes in.
There we go.
Lang and NVIDIA calls the Mercedes deal a transformative moment for the company because it's gone from hardware to video games to hardware and software for AI, and now hardware and software and services for cars. Let's see. NVIDIA's earnings per share are expected to jump 40% to 8.15 this fiscal year. Shares recently traded at 370 or 45 times earnings. Data centers could be a 10 billion business for the company within 3 years. Cars still less than 1 billion. And there's more to this article, but I encourage you to look it up on Barron's. But basically, so NVIDIA as itself, started at a company with a singular focus of video games, and they are now branching out into these multiple venues. Now, Amazon is a company that's like that as well. They started with one mission statement, which was to deliver cheap textbooks to college students through the mail. And I used it for that back in college, but I never saw the full scale of scope for it to where you'd be buying everything you could think of through this company and having a media streaming platform. They're looking into autonomous vehicle driving now, following Tesla's lead. So you have these large conglomerate companies that have all of these different avenues that they're doing successfully. And NVIDIA is joining those ranks. So I think even at 365, the stock is a bargain for what this company is going to be. This is going to be another Amazon-style stock where you're going to see this thing pump up or even like Alphabet for Google. And you're going to see this a $2,000 stock relatively soon, I would imagine, especially as this news kind of disseminates through, because it's just starting with Mercedes now. You'll probably see other chip manufacturers jump on board, but NVIDIA is going to have the lead in this, and they're still the lead in graphics processing. There's nothing better than an NVIDIA video card in your computer. And there's, and with their data centers that they've put out now, they've been able to reduce rooms of supercomputers down to one standalone supercomputer unit, saving vast amounts of space and adding more computing power to it. So they're a leader in whatever industry they dip their hat into. So I think they're going to be a leader in automotive as well. Look for that to continue to make this stock worth more and more, and their company to go into other avenues as well. So with that, it's kind of staying on the computer racket. we have a story about Microsoft. TJ, you want to kind of take us through that?
Yeah. You want me to? Are you doing the screen? Okay, you got the screen share there.
Yep.
Alrighty. So let me read part of the article, and then we'll kind of go over and analyze it. Microsoft Corporation's permanent closure of its retail stores, including during the global coronavirus pandemic, is not surprising, given the negligible amount of revenue the stores contribute to the company. But it might be a sign that the Surface hardware business could eventually be on the chopping block. Microsoft, ticker symbol MSFT, it's down about 2% Friday. It will close all of its physical retail stores in the U.S. and take $450 million charge as a result. The company said its sales growth has moved online even more so during the current pandemic. Our quote, our hardware and software sales have continued to shift online as our Microsoft product portfolio has evolved to digital products, including Microsoft 360, gaming, and entertainment, close quote, wrote David Porter, corporate vice president for Microsoft Stores, in a blog post. We have seen a strong growth on Microsoft.com and our digital Xbox and Windows storefronts, reaching up to 1.2 billion monthly customers in 190 markets. Microsoft delved into retail in 2009, ignoring a failed effort during the dot-com boom with a store in Scottsdale, Arizona, timed in conjunction with the launch of its Windows 7 operating system. It eventually opened a new store in Silicon Valley in 2011, strongly influenced by Apple Inc.'s ticker symbol AAPL design, aesthetic, and approach. One customer product it was pitching at the time was an ill-fated Windows phone. Soon, Microsoft had another line of products to pitch in its stores. In 2012, former chief executive Steve Ballmer introduced the Surface Tab, which that function as a laptop, and it has evolved into a line of products, including a forthcoming dual-screen Surface Dual that will include a mobile phone and fits in your pocket. Since then, there have been many changes at Microsoft, notably at the top with the appointment of Satya Nadella as the company's chief executive. In 2014, Nadella's focus on cloud computing has rejuvenated the once lumbering software giant, which is now a mind-numbing market cap of approximately $1.5 trillion. Under, yeah, I was not expecting that number. Under Nadella, many businesses have flourished with high growth rates, but not Surface. As Microsoft heads to the end of the fiscal year, Surface has shown year-over-year sales growth of negative. Well, it shouldn't be sales growth if it's negative 4%. Negative 4%, 6%, and 1% in the first 3 quarters of the year. In the first fiscal quarter, it was the only one of 11 businesses that Microsoft broke out that declined year over year. Losing retail stores may not be much of a drag on Surface, however. Dan Eves, the Wedbush Securities analyst, said that the amount of revenue from retail stores is probably about 2% of the company's total customer sales. He believes the Surface line will continue growing forward, but the lack of a retail presence could affect future sales. No retail stores is a gut punch for future laptop sales, given its performance within our stores, Ives told MarketWatch in an email. Let's see. I'll keep going. It's only a little bit more here. I was trying to see if we got the nitty gritty of it, but there's a couple more paragraphs. I'll go through and read those just to kind of get a well-rounded picture of this article. Maribel Lopez, principal analyst at Lopez Research, said she believes the Surface will continue to live on, not because Microsoft plans to crush the competition, but more because it keeps the developers fresh on what's needed for the various markets. Microsoft has had more success in devices than any other original device manufacturers thought possible. Lopez said its market presence forces ODMs, original device manufacturers to innovate and forces Microsoft to understand the balance of requirements versus innovation. She added that the industry watches Surface and its developments quite closely. Surface is likely to live on for a while. Microsoft will still continue to sell Surface with its retail partners such as Best Buy Company and Walmart, with over 7,000 locations in the US alone. For customers who want to experience all its products in person, including the Surface, the company says it plans to reimagine some of the company's spaces, such as in New York, Sydney, and Redmond, Washington, as centers for all of its customers. We'll continue to co-locate engineering, sales, support, envisioning centers, executive briefing centers, and retail spaces for maximum impact for our customers and our company, Microsoft's Porter said in his blog post. It will also continue to invest in its virtual storefronts and video sales and workshops. Microsoft declined to discuss the Surface line's future in detail on Friday. If Surface is not doing well enough to support retail stores, though, why is it worth other expensive efforts as it drags down margins and growth from other areas? Even if Microsoft does not give up on Surface soon, expect it to spend much less on developing and supporting its own gadgets in coming years.
Well, I'm for one not going to miss a Microsoft store because
Yeah,
I think, as you said it best, there's no cult of Microsoft, but there is a cult of Apple.
exactly.
You want to elaborate on that a little bit?
Yeah, Apple kind of has almost like a cult mindset where their customers are pretty much devotees of Apple. When they need something, they go to the Apple store and get it. A lot of times, it seems like they just kind of have a very super brand loyal and brand culture awareness that Microsoft doesn't really have. Everyone enjoys Microsoft and they enjoy using the products, but there's no big rush when Microsoft kind of comes out with a new product. You don't see the crazy frenzy that is there when Apple unleashes something new. Apple's kind of like the sleek, sexy, company, and Microsoft is more almost kind of industrial, where it's there to get a job done and doesn't worry about looking sexy or sleek or anything.
Yeah, I keep thinking of those old commercials from a few years ago where I'm a Mac, I'm a PC.
Yeah.
That's the exact view that we consciously have because it's been that way for so long. I think Microsoft, well, this is probably meant for somebody in a boardroom to throw a PowerPoint up on this display. It's not necessarily for me as a designer to draw on. And then the Surface is a good product for that. I had one for a little while, but it just didn't have quite, like, they were trying to balance designer versus I need this for Excel spreadsheets a little bit too much. So it wasn't a cohesive, just aimed at just me as a designer and artist. So I ended up going over to the Apple iPad. And that being said, you can definitely use the Surface Pro to create art. I know several people who use it and love the device. I think it's a good device. And yeah, it'll be around for a little while, but I think Microsoft as a brand tried to brand themselves as an originator of product. But you can still buy a PC from Dell. You can still buy a PC from Lenovo and all these other manufacturers because their platform's still open.
Exactly.
Apple has a closed loop around their hardware, so you can only get Apple from Apple, and that's something I think Microsoft probably would have been better if they would move to that model. But then you'd put all these other manufacturers out of business. So it's like a win-lose thing for them. They're going to gain a little bit more revenue, not having to pay these lease agreements on these stores. So maybe they can leverage that and be a little bit more in the presence of in Best Buy, for example, where Apple and Samsung definitely have huge presences. Maybe they can increase that.
Exactly. Yeah, and I don't know. Like recently, I had to get there was like an sort of old laptop that we're trying to bring back from the dead so we can use it, and it didn't have any Microsoft products on it. It didn't have Word or Excel or anything I need it for. So I had to go get Microsoft 360, and not only was it like, well, I don't want to have to go to Best Buy and buy like a Microsoft 360 card, but it never occurred to me like, oh, I should go to the Microsoft store and get this. I went on their website, I downloaded, the Microsoft 360 packet that I need, and that was it. There's no,
Yeah.
you know what I mean? Like I think like an Apple user would probably get more excited. Like, I want to go to the Apple store, play with all the gadgets and see what's new. Whereas with Microsoft, it was just kind of like, hey, I need the new software. I'll just download it. Yeah.
Now their stock is doing, it's at 196.33. So definitely they're about half is what Apple is valued at, and I think they're still a good bet to buy in on, especially with the new Xbox coming up. That's going to do really well for them. I'm looking forward to getting one myself. There's actually an interesting story about that. I don't want to get too into the weeds but Microsoft has notoriously had poor sales of Xbox in Japan. So they're partnering with Sega to do Sega branded Xboxes in the Japanese market. And I really want one of these because it's got the Sega logo on the outside. I'm pretty sure the AI is Sega branded, not Xbox branded.
Oh, nice.
And yeah, so hopefully I can figure out a way to get one of those because it looks really cool. And I think that's an interesting approach to basically license a former competitor in the video game hardware market to get that edge into that market in Japan. So yeah. I'm curious to see how that does for them.
Did they say why Xbox isn't doing, like, is it a cultural thing where X has a negative connotation? So
it's nothing like that. It's like Microsoft is an American brand. Japan has been ruled by Sony and Nintendo for so long. Sega was a Japanese brand, so they're betting that there's going to be more of a this feels more like ours, not like foreigner console. So I think that's the route and logic that they're going with.
Gotcha.
And it'll be interesting to see how that works out for them.
Yeah.
Okay, so we kind of got into a little bit of stock talk. Let's get into some more. You got some picks for us for the week?
Yeah.
Your date, marry, kill?
Yeah. For my date, I'm thinking ticker symbol ENSV. I think we bought some of these last week. Yeah, I held on to mine for too long.
Ooh, and Servo Corp, 18 cents.
Yeah. Are you still in? I still have mine from last week, and I didn't sell. Like, it was up for a little while. I'm like, I should sell, and I'm like, no, man. I keep on selling too soon and not making any real money. And then basically, it's not in Servo's fault. Pretty much all the market's down. So had the market not taken a huge shift downward, then it probably would have been back on its way up on Friday or something.
Well, if you look at its chart, it's fairly a flatline stock.
Yeah.
5 days ago, 22nd, it was 19 cents. It's 18 cents now. Its peak was 25 cents. So, and then fairly flatline. So, yeah.
So this is one of those I should have sold at 25. I'm in it for 23. 6. So like 23.5 cents.
Oh wow.
But I mean, it's not a huge loss, but it's still one of those examples of, with me, especially when I try to do the day trading, I either sell too soon where I could have made more, or I don't sell soon enough to where I lose a little bit. So I'm still trying to find that perfect Goldilocks time frame of holding on to a date, where it's not too cold, it's not too warm, it's just right.
Yeah, for sure.
So then for a Mary, I picked up some GIS, General Mills. This was on one of those where it was on like top 10 stocks that have paid out a dividend for like 100 years or something, So I was kind of keeping an eye on it because usually, I think before everything started dipping down, it was a little over $60, like usually around 60 to 65 a share, And then so I was kind of watching it because I had around that in my Robinhood budget to buy something, you know, at around 60. So I was like, all right, I'm going to wait till it goes down. I'll buy some on the dip. So I ended up buying it for $60.08, which I thought was a really good deal. Since then, it's gone down another 81 cents, but they have a dividend yield 3.25%. They pay out dividends pretty often. And then going into it, General Mills, I was saying, cereal, that's not a good stock, because who sits down and eats a bowl of cereal in the morning? You know, everyone's on the go and everything. But this one, I actually did some research beyond what I normally do, and looked at their website, and they have they make all kinds of stuff, like Old El Paso. They make Totino's pizza. My wife and daughter, like, they live off of Totino's pizza. They probably eat one a day. So I'm like, it's a safe stock, because I'm pretty familiar with their with a lot of their different lines and everything. So I bought some of those. I think I miss the ex-dividend date to get dividends anytime soon, but it's another one I'm kind of keeping an eye on for when it dips down lower again, to maybe pick up some more of those. So it's one of my dates, just buy it and collect the dividends until the end of time. And then for my kill, this one I keep on looking at, because we talk about Denny's, the restaurant, a lot.
Oh, no. And
I keep on thinking, like, do I have stock in that? So ticker code DNN. Yeah, there you go. So this one I bought, it was around 41 cents. I'm like, it's a mine, it's the price was good, like it was penny stock. I'm like, no big deal. It's 41 cents a share, and I'm like, I'll buy one of those. They mine for a lot of different products, like uranium and everything. So I'm like, so I think since I bought it, it hasn't been up past what I bought it for. I bought it, June 8th. I don't know, it's been like a rough last couple of weeks, so nothing's really been too far above what I bought it for. But this one I'll probably, once it gets up to around what I paid for it, or hopefully a little bit more, I'll probably kill this one off. Right now it's 32 cents a share, so it's no sense selling it, because it's not like I have a lot invested into it. But it is one of those, there's no dividend yield or anything. So I think as soon as it kind of gets up to where I'm not losing anything on it, I'll end up selling that one off and never looking back.
Sounds good. For me, one of my dates that I've been working on is Kitov Pharmaceuticals. There's that evil pharmaceutical word again. And that is stock KTOV. So currently trading at $1.20. I got in on this at 76 cents a share, so I'm still up.
Nice. Yeah.
Which is nice. I'm looking at this one. I'm in it for 25 shares. I'm looking at hopefully getting this to go back to its peak levels around $1.38, $1.40, maybe get close to $2, and then I'll probably get rid of it, because I don't see this one as being a huge blow up stock. It's not something I want to get long term invested in, because it's pharmaceuticals, and we've been burned by too many pharmaceuticals. So it's up. It's good to kind of get take your profits is one thing I've been reading a lot about lately, and that's where there's an actual thing called taking your profits, where let's say you've got $100 invested in, we'll just say NVIDIA, for example, because we used it earlier. And then the stock grows and you've earned another $50. Taking your profits means you sell enough shares to get that $50. And you take the $50 out, but you keep the original investment amount in to continue growing. So if KTOV was a larger thing for me, I'd probably be looking at that. But as for right now, I'm probably just looking for this one to peak close to 2 next week, hopefully, and then I'll be unloading that. For my Mary, I've got quite a few that I'm kind of married to, but I think I may have already mentioned NVIDIA as being one. But I'm definitely in it for the long haul with the free plug share that I got, because that's up to almost $7 a share. So that one, I think I'm just going to sit back and just let it stay forever and see how high it goes. And if it becomes a really high dollar stock, then that would be the only way that I would ever sell it off. But I'm just curious to see where that grows. And then I have more kills than I know what to do with. I have an old TD Ameritrade account, and I've been using that for penny stock investments, pink sheets, companies that are in danger of being delisted or their future is in the uncertainty. And this is also for like risky new IPOs and stuff like that. So I've kind of been taking some information from the people that I follow on Twitter, Yates Investing, Stan the Trading Man. Some of these are longer holds than I want, but I started with JCPenney, and JCPNQ is its current symbol. They changed it. JCPNQ. Type it in. No. JCPNQ. So currently trading at like 26.5 cents. Sadly, I didn't pay that for it. I believe, if I can pull up my chart here. Yeah, I got into this stock in around 70 cents. So it's been a real dog for me. I've lost about 70% of my investment on it. So this is one that it's like I check these every once in a while, but I got a whole bunch of different penny stocks that are just real losers right now. And the second any of those earns any bit of money, I'm killing them all because it's added more stress to my life than anything. So
I hear you there.
Yeah, it's time to go. So I'm looking at especially this one because this has been my biggest loser so far in trying to get into this penny stock game. And a lot of people play the penny stock game. What they'll do is they'll have $1,000 that they can afford to risk on this investment. They usually buy it with options, which is something that I don't know enough to even try. So what I'm doing is I'm just buying this penny stock, hopefully buying it on the lowest end, and then try to sell it when it goes up. Well, people who are putting $1,000 into a 20-cent stock, you get a lot of shares that way. And then if that stock goes up to, earns over 100%, it becomes a 40-cent stock. It's not a great performing investment, but you just earned, 50-60% on $1,000. So yeah, that's a good way to play these things, but they come with that high risk of like what I'm doing with my measly $30 or $40 investment in JCPenney's. I've lost most of that. So I've got to kind of sit on it and hope that it ticks up again. And I don't want to get into that situation with $1,000 because I'm not in the position in life to afford to lose $1,000. So if I have $1,000 for trades, I'm putting that into Amazon because I know that's going to grow at a safe 10, 12%. I can't afford to risk it on a 200% increase on a penny stock right now. But there's people who can, and good for them. And I'm happy to take their recommendations and hopefully make $20. I can afford to do that. So any gain is a good gain as far as I'm concerned.
Oh, exactly. Like right now, I kind of consider myself a kind of like a crawling before I can walk or before I can run kind of thing,
Yeah, exactly.
making a little here, making a little there, if I can make 20 on something, good. If I lose, $5 or $10 on something, I'm kind of learning and gaining the experience because you can read all the books and listen to all the interviews and everything, but until you're kind of in it and you kind of get that feel for when to sell and when to buy and everything, it's you still want to do your research and everything, but sometimes I think for knowing when to sell, there's kind of like just like gut instinct that you kind of have to have that you just develop over time.
Yeah, exactly. And that gives us a good segue to talk into one of our last segments on webull.
Yeah.
Now, I joined up webull mainly because I kept hearing about it over and over again from Meet Kevin because he pushes it really hard on his his investment and YouTuber. He's a YouTuber. He does a lot of real estate stuff, so he does great videos on real estate. He also covers the what's going on in the Fed pretty well, and whether or not we're going to get a new stimulus next month, which looks like we are. Good, we can have some more Monopoly money to play with.
Yeah.
but Webull is a really good place if you're starting to feel like you might be outgrowing Robinhood, which I'm going to stick with Robinhood for the long term. I love it. It's a great mobile platform. But Webull offers a lot more tools, especially for education. One of the things that really pushed me over the edge to get them, not that you get 2 free stocks, which is pretty cool. You get 1 stock for signing up, and you get another stock once your $100 initial deposit clears. So I've got 2 free stocks so far. And I have moved my Square stocks from Folio First, which I hate that platform, mostly because they steal $5 a month from you for the cost of using their platform. But I never wanted to sign up with them at all. They originally I bought my shares in Square. Their IPO was first put out in Level 1 or it was some company like that. And then that company upended and Folio First bought them out. So I was immediately, all my stock in Square was immediately moved into an account, which was now charging me money, which the first one was a 0 commission place. And I've actually lost stock because they don't send me regular emails saying, hey, you owe us the $5 a month. They'll let it accumulate. I forget about it because I have trouble remembering their name, for crying out loud. So I'll come in and find out one of my shares of Square got sold off so they could pay for that stupid BS fee. And I was like, you know what? I hate this company. I never wanted to be a part of it. If you have it and you love it, that's great. Good for you. But I got soured on them because I entered into a relationship that I didn't want in the first place. So I got that stock moved. Took a while. It took 5 days to get it moved. But I got it moved into my Webull account. So I have all of my remaining 9 point whatever shares of Square in my Webull account. And that stock's doing gangbusters. It's up to 105. I bought it at $11. So that's nice. And I like Webull because it gives you more than what Robinhood gives you as far as charting, research. There's a great little community built into it. There's like its own little social media Twitter engine inside of there. So you can actually chat back and forth about trades with other Webull users, which I think is a really cool function. And the one thing that I really want to talk about that I think is really good for people in our situation and why I would recommend it is because they offer paper trading. Paper trading is an excellent way to learn, and that's what we're all about here, is learning how to navigate this stuff without risking your money. So I'm going to try paper trading with options and see how that goes. You can basically enter in whatever starting capital amount you want. You make trades normally like you would through the regular platform, but it's not real money. It's just a learning tool. And this is a great way, especially for younger users, people new to the market, without risking your, life savings, which could be, if you're as blue collar as, I've been in my life, your life savings might be $100 at one point, or you got 10, 20 bucks in your pocket. You can try paper trading levels of money like that and just see what happens. Maybe the stock market's not right for you until you save up more capital, but it's an excellent tool. I wish Robinhood said some kind of feature like this because I love Robinhood's simplicity. Webull gets into charting and stuff like that. So I think this is a natural good step for me. Hopefully it will be for you, TJ, because I know you just signed up to start learning how to read these charts better, and a good way to try out some of these gambles and see if they pay off. And taking that knowledge, and then maybe when we get to the point where we can risk $1,000 on a penny stock and see it go up 247% and then take those profits and run, maybe we can get to that point. But I think this paper trading tool inside of here, plus the community that's already built into the Webull app, are great resources to continue the learning process.
Oh, exactly. Yeah, I've been kind of messing around with my Webull account. I just started this morning because something I've been wanting to do. Seems like it has a lot of advantages over Robinhood. I'm going to keep both accounts, of course, but I still need to download the app on my phone, so I'm going to try and do that. I have a feeling that the user accessibility on the app, the phone app, is going to be a lot better than me trying to use a website like I've been doing.
Yeah. The desktop app, which is what I have up here on the screen of it, they've got a little preview. So when you go to their website, webull.com, there'll be a link in the description on the video where you can sign up and get those 2 free stocks if you like. And it's an interesting platform. It's a much more complicated, but I think it's still like they've got it as simple as possible for the platform. And our good buddy Franklin, who was a guest past, he said he signed up for Webull this past week as well, and is interested about the charting feature. So yeah, I'm looking forward to playing with the paper trading. I'm going to start with $1,000 in paper trading and see if I'm any good at growing that $1,000. We'll see what happens, but I think it offers more for us in terms of the education, which is what I'm really excited about. So again, yeah, you can get 2 free stocks. There'll be a link in the description you can click on to open an account and give it a try. To get the second free stock, they do ask for a $100 deposit, and you're going to let that clear over 5 to 7 business days, I think it is. I forget which one it is, because they also takes time for your stock to clear. It's not like in Robinhood where you get the stock instantaneously listed there because they're giving it to you ahead of time. Webull, I opened a cash account, not a margin account, but they still give you that margin functionality where I put in my $100, I could instantly start trading it, but I'd have a negative cash balance because I haven't had this 5 to 7 days for it to clear my bank. And so that's another warning to people using this. When you deposit money, it's not going to come out for about 5 to 7 business days. So you need to make sure that you have the funds in there when it does clear. Otherwise, you're going to get hit with some penalties, like you're bouncing a check, basically. Especially if you've bought stocks with that margin that they've given you to allow you to trade while they're waiting on those funds to clear. So that's my big warning there. The only feature they don't seem to have is the pink sheets, which is what I use the TD Ameritrade for. But like I said, it's been nothing but a losing proposition for me right now. So maybe that's not something that you need to even worry about. But they do list the stocks. They'll just say it's not available for trading on the platform if you look up something like JCPenney's, for example. So yeah, so hopefully, as the next few weeks as it comes and we learn more about this app, we'll share more with you as our experience grows with it. Otherwise, we encourage you to stick with Robinhood. You can get 1 free stock in the description of this video for Robinhood. You can also join up for Acorns and get $5 to get yourself going if you just want to set it and forget it and let the market grow your money without having to worry about picking stocks. Acorns is definitely a way to go.
Mm-hmm.
Go ahead.
Acorns, I looked at my Acorns the other day because I just kind of set it and forget it, and I had a couple little, it wasn't crazy big dividends, but there's some dividends in there, and I'm like, holy cow, as bad as the stock market is right now, my Acorns is getting some dividends, so that was really cool. Yeah, no, it's a great platform. I got a haircut this past weekend, and was given the opportunity to just drop that, that I'm into this kind of thing. I think we were talking about vacations, and she was like telling me that she was getting ready to go to Hawaii. He's like, oh yeah, I'm getting ready to. I'm planning a trip to Japan, and I'm using this app called Acorns to save for it. And so she asked, "What's that?" And as I ended up texting her the promo code, or my invite for that. So hopefully she'll sign up, and I'll get $5 in my account, and she'll get $5 in her account. But I told her, like, look, it's the spare change that you don't miss. It gets invested. It's growing at an average of 8%, and it's almost like at the rate of growth that it's been doing. It'll pay for my entire trip expenses to Japan in 3 years easily. So I'm looking forward to seeing that continue to grow. Exactly. It's awesome for saving money because, like you said, you don't miss it because it's all the leftover change. You can also set it up to have deposits. Like I have mine set up for a $5 deposit every week because I'm like, I won't notice, Yeah. And plus all like every credit card, I never use cash. So every credit card or debit card I have is hooked up to it. So anytime anything's getting paid or purchased or bought, there's a little bit of money going in there to save. So
yeah, exactly. And then one of the things that I espouse on this program that a lot of people push back on for some reason, but pay yourself first. And Acorns is a great way to pay yourself at the same time as you're paying your bills. You know, it doesn't matter what the increment is. If you can only afford to save $2, let that be a $2 roundup on buying groceries, you know, a couple times during the week.
Yeah.
You're still paying yourself first. You're still saving some money and allowing it to grow.
Exactly. It's a really useful tool for that. You know, it seems really well managed, because I was just surprised I was still getting dividends from it this week, you know, after everything going on in the stock market. So whoever's in charge of managing all the stuff on there is doing really well.
Yeah, definitely. And on that note, I also want to touch on one last tool that I just added to my financial arsenal. I don't have any money in here yet, but I'm a big proponent of buying silver and gold. Now, gold's really expensive, but gold is real money. Silver is real money too. It's more accessible. So I think if you want to try to put your money somewhere where you can physically hold it in your hand, like heaven forbid, worst place scenario, and the entire country looks like Chaz, you're not going to get to a bank. You know, you're going to be worried about the fact that there's criminals coming after you to steal your food, and there's not going to be a policing around. You know, and this is really worst case scenario. But holding physical silver in your hand, that's something you can barter with. That's something that's always going to be worth something. Well, gold is the king of all that. It's never going to be worth nothing. It's always been money. It's been money for 5,000 years. And a lot of people tell me, it's like, well, I can't buy gold. That's too expensive. You can buy fractional coins. You can buy 1/10 of an ounce coins. You can buy gram coins, you know, little gram bars, 1 gram, 2.5 gram, and 5 gram. Those are ways to physically hold it in your hands, but those are still high dollar amounts. How can somebody who doesn't have a lot of money buy gold in fractional numbers and still have it as an asset? And this is a new product called Glint. It's an app on your phone, and it's a card, a MasterCard. It allows you to buy gold on a fractional basis and spend gold with this credit card, which I think is a really interesting proposition. So you can buy gold any amount, large or small, at the most competitive premiums on the market. Now, what a premium is, with gold and silver, you have spot price and you have premium price. Now, the spot price is the price of the actual hard metal. That's what it's valued at. So right now, I think gold is $1,784 an ounce, and silver is just under $18 an ounce. That's the spot price. The premium is what you pay on top of that for these coins, for bars. And this is basically pricing in the manufacturing and production of coins, the minting of coins, the production of bars. So depending on the mint that you're getting it from, again, pardon me, you're going to get a variance in spot price versus the premium price. The larger increments of gold that you buy, you get a lower premium price than you feel. So like it's more expensive for you to buy a 1/10 coin than it is to buy a 1 ounce coin if you're just looking at the difference between the spot price and the premium price. So they're going to give you a good premium price because you're buying physical gold that's held in a bank that's protected by Lords of London. And basically the story behind this is that these gold acquiring bankers decided to create a product for consumers to buy and purchase gold digitally and spend it digitally. So saving gold, inflation erodes the value of your paper money. Currency is paper money. And it's less and less valued, especially the more that the federal government is deciding to print it off. It'll become worth less completely at some point. I mean, if they continue quantitative easing, it's going to be Weimar Republic. And if you don't know what I'm talking about, the famous image of a gentleman with a wheelbarrow full of German money, paper money, going to buy a loaf of bread with it. That's rapid inflation. You're seeing it in Venezuela right now, where people are hunting street dogs and going through garbage cans. Average citizens like you and me in Venezuela are having to hunt street dogs and go through garbage dumpsters to find food. That's the price of socialism, basically. And so what saving gold is it protects you from our currency, our dollars becoming, basically you could just burn it and get more use out of it than spending it. Right now that hasn't happened because we all still agree that the dollar is worth $1. But once that confidence in the market, confidence in the currency goes away, then it's going to happen. This has happened historically. It's been going on ever since there's been money. Governments will try to cheapen it. Like in ancient history, they had gold coins, but at some point they decided, you know what, we need to inflate this. So the amount of gold in the coins was reduced. They put other metals in it like copper and nickel to cheapen it. You know, our quarters used to be solid silver, and then they were partially silver. Now they're mostly made out of nickel plate and other, you know, crappy junk metals. And we just agree that it's still 25 cents. Well, that's, you know, it's fictional. So once that goes away, what's money? Money is always gold and silver. So you can spend it. You can spend your gold instantly with your Glint MasterCard. Foreign currency, you can save, exchange, spend, and switch between various currencies. This will be helpful in Japan. And with your Glint account anywhere at real exchange rates. Multiple currencies are coming soon to the U.S. For now, you can exchange between U.S. and gold dollar. It's supported by some pretty good places, Bray Capital, NEC Solutions, and more. Investors, Glint is privileged to be backed by a world-class group of investors who believe in our mission to redefine money and make it fairer for everyone. Our individual professional investors are complemented by a number of well-established institutions. And those are some of the ones that they notice. Now, this is coming straight from their website. This is their propaganda, which, you know, I'm taking a risk on that this is the truth that they're trying to say. I know Franklin liked the tip. He said, yeah, thanks for the Glint info. Can't wait to see how this works. Because, you know, it's important to have a good store of wealth. I don't have any money in it yet. I'm waiting for a paycheck to come in where I can afford to put, you know, some money into this. But I'm curious to see how it goes. And there'll be a link for you. I don't get any, you know, TJ and I, neither one get any money for this. It's just to send you there directly to the link.
If they want to send us some money, we'll gladly
sure.
take it.
Yeah, they're not involved. So far, there's no incentives for us to do this. But this is another tool that allows you again to buy gold fractionally. So if you've only got $50-$60, but you can put it in gold, it's going to be safer in gold than it's going to be in your bank. That's all I'm saying. And again, I'm not a licensed financial advisor. Neither is TJ. We're complete amateurs at this. Please talk to a financial consultant before you move big amounts of money anywhere. We just want to make this tool known to people. It might be for you. Check it out. Go to the website. It's glintpay.com. Link will be in the description, and see if it's something that might be right for you.
Also, much like a regular bank account, Glint is also FDIC insured up to $250,000. So if anyone's worried about any risk, you know, the FDIC insured, it's pretty much like any bank account that you have now, where there's still some insurance to it, to kind of, for anyone that's kind of worried about the risk or something involved with it, it lessens the risk a little bit.
Yeah, there is a 0.5% fee if you exchange back and forth. So that's how they support their business model to do this. Let's see. Yeah, get started. It's free, quick, and easy to open an account. Just minutes, you'll be ready to buy, sell, and save. Spend gold in multiple currencies via Glint app and the MasterCard. You fund, add money to your account with your bank account, transfer, or a debit card. We said that we talked about the multi-currency. You can withdraw money anytime, anywhere, at any ATM that accepts MasterCards. Freeze your card if you lose it. That's fine. It's very secure. And again, TJ mentioned the FDIC insurance that it abides by. Spending is, you know, normal spending, but you're spending real money. So cheaper. There's no hidden fees. Glint will use interbank interest rates. Only charge a 0.5% transaction fee. That makes us 8 times cheaper than banks. So again, pretty good. And Glint is not a bank or cryptocurrency. So Glint is gold. That's what you're buying and selling and spending in. It's not crypto. It's not it's not it's physical. And you can actually, there's a process I looked in the app where you can request to have your physical gold that you own not be digital anymore and sent to your house. So what's not to like? You can basically use this app to accumulate what you can afford. And once you've got 2 or 3 ounces of gold, hey, send that to me. I mean, it sounds like a good tool. So again, read through it. If it's right for you, go for it. There's a link in the description you can click on. We're not being supported by any of these companies that we use. We're just giving you our experience. Full disclosure, if any of them decided to sponsor this program, we would definitely tell you that. But right now, it's the only thing in it for us is that if you sign up with Robinhood, we get a free stock and you get a free stock. If you sign up for Webull, you get free stocks, we get free stocks. So that's kind of the way it goes. Acorns, we get $5, you get $5. So it's win-win. And we like these tools and we use these tools. We wouldn't recommend a tool that we're not using. So that's kind of where I stand. I think you agree with that, TJ?
Yeah, definitely. Even newer tools that were like, I'm just starting, like Webull and everything. I get that that way I have firsthand knowledge of it. I don't want to recommend anything that I haven't used yet, So a lot of the stuff we recommend or talk about, we're putting our money where our mouth is because we already have money in there,
Yep, exactly. I do want to give a shout out to our other commenter, Pops, shouting out our names, Trico, Eric. Hey. Yeah. Hey, Pops, thank you so much for listening.
He's
and watching.
He's my erstwhile stock what do you call it, advisor. Because once in a while I'll post something and he'll be like, you should buy this, and he has a knack. He doesn't usually steer me wrong, so he's
cool. Well, maybe we can have him as a guest and he can share some of his history and expertise with us then.
Yeah.
Why not? All right, I don't have anything else. Do you have anything else, DJ?
That's pretty much everything right now. I'm just kind of I was buying some stuff on the dip, but the dip kept on dipping. So,
yeah, no kidding.
So right now,
I thought I was buying more IDEX at a bargain at $1.50, and that's $1.39 now. So.
Yeah, exactly. So right now I'm just kind of in a holding pattern. I got my Robinhood set up for $25 a week is deposited into there for me to kind of play around with. I'm not sure if I'm going to buy anything on Monday. I'm going to see how much longer the dip keeps going. There's a lot of talk and speculation about at the end of July, what's going to happen when there's some changes to some of the unemployment. So I think I'm just kind of in a holding pattern. I'll probably just stock up some cash in my Robinhood account and then see if there's another huge dip like there was around the end of March, where I can get some of these stocks for like another 25% or a third off of what they are now. I'll probably just buy a ton of stuff.
Cool. Did you have a term for us today?
Oh, no. I was working on it earlier, but I never finished up the graphic or anything. I'll get the graphic finished up and get it posted on our social media. Not a problem.
I did name drop IDEX earlier in the program, so I do want to just touch base on that just a little bit. Basically, what happened with them, they had a couple of different firms team up who were big shorters in the market, which means they bet against companies. And they put out some bad PR against IDEX, which IDEX is trying to prove false. Basically, Hindenburg was one of them. They said that IDEX is lying to you about having this giant showroom for EV vehicles. And Alf Poor responded to that with, he's the CEO of IDEX, with drone footage of their facility. Heidelberg put out photos saying that these were fake photos, but these photos have the date of 2018 in them. So there's a lot of shifty, shady stuff. But the shorting really hurt the stock, and that's why it really had a big dip. I do think electric vehicles and hydrogen vehicles are going to be the future. We have Nikola trading at record highs, like $74 a share, I think. They have a hydrogen truck coming out, but they haven't made any sales yet. So this is still speculative of whether or not. But I think this market's going to be here to last. Ideanomics, IDEX, is focused on being a facilitator, showroom facility energy. They're trying to provide the energy that's necessary for other manufacturers like Tesla to manufacture their electric vehicles. And they're focusing on fleet trucks, so deliveries for like Walmart and Amazon. There's a rumored partnership with Amazon, and Amazon also just bought a company that does self-driving cars. So a lot of big things on the horizon. Mm-hmm. You may get dirty buying stocks, and you may get hurt like I am right now with IDEX, but I still think it's going to be a $5, $10 stock relatively soon, because this is the way technology is changing things. EV market in China is huge. The government is basically, because it's communist, forcing citizens to convert to EV vehicles. So take that for what you think. Hope that never comes to the States here. I hope we always have the option. But if EV vehicles become cheaper, easier to maintain, a better solution, then they could overtake gas. Right now, gas is still cheapest, and there's plenty of it. We don't have anything like peak oil or anything like that. That was a myth propagated back in the 80s and 90s. But we can still spend oil and use it. Oil's cheap right now, and that's also hurting the market too. So there's a lot of forces in play. Don't get into stocks and don't get into the stock market if you aren't willing to put a little bit of research into things.
Exactly.
Because it is a risk. But everything is a risk. I look at it, putting my money in Chase Bank as being a risk now. So that's why I'm looking at services like Glint. Put my money somewhere where it'll physically exist no matter what happens in the future. That's all I got. I want to thank everybody for listening, whether you're listening on Spotify, Google Podcasts, Apple Podcasts, wherever you're listening. We want to thank you for subscribing to the show. Thank you for subscribing on YouTube. Hit that like button. Hit the share button. Tell your friends about us. Tell all your blue-collar, poor, broke money hustle friends. If you have a side hustle that you'd like to talk about, send us a DM on social media at Broke Money on Twitter and Broke Money Hustle on Instagram, through our Facebook page, through the comments, anywhere you can find us. And we'd love to have a chat with you and maybe even have you on the show. We do want to vet people. So it just depends on whether or not, what you're saying is true as much as possible. And, if you've got a side hustle that you recommend, come on and talk about it. Tell us how you're doing with it.
And it has to be a legal side hustle. It can't be body parts on the black market or anything. It has to be something
if you're a DoorDasher, if you're a Lyft driver, an Uber driver, Shipped, I think, is the company you go buy groceries for people and deliver them. We'd love to talk to you, see how you're having success in that side hustle. That'd be really cool to have as an episode. So until next time, until Monday, we'll hope for a better open to the markets, and we'll see you then on live on YouTube and Facebook, and you can hear us on the podcast. Thanks very much, everybody. Have a wonderful weekend, and we'll see you on Monday.
This is Broke Money Hustle. And now, here's Broke Money Hustle with Traco and Erik.